Hi there, welcome to Kneppy Invest and welcome to another technical update video. It has been a good week. I'm just having a glance at the XJO and we had 5 updates, up days, not updates, up days during the week. In fact, looking at this, we've had 1, 2, 3, 4, 5, about 6 or 7 up days in a row for the XJO. How about the Nasdaq? 1, 2, 3, 4, 5, 6, 7 updates in a row. It's been a nice week and a half on the markets after that a little bit of a dip. And interesting enough, I am still reading or listening to podcasts in regards to that dip. Here is that dip last Monday week ago, and that on that particular day, Monday week ago, the Nasdaq actually rallied. It was only down 2.96%, but it was down by more than that, and that was the bottom. And a lot of people have been saying, experts have been saying that this dip in the American markets was caused by the yen carry trade, and I am pushing back on that. In fact, there was one podcast with James Kirby who had a guest on, and he was sort of pushing back as well. Was it really caused by the yen carry trade? And she said, yes, yes, it is. She was being a little bit disrespectful, in my opinion. In fact, I stopped listening to that particular podcast. Now, I have heard a few people. There was a podcast by Odd Lots, and they had a macro strategist on, and he said he was asked about it. In fact, one of the guests said that it was caused by the yen carry trade. He said, no, 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 no. This was really led by weak economic data in America, and then that yen carry trade sort of exacerbated the problems, but not that much, because that yen carry trade, which happened on the Monday, the 5th of August, that was the bottom in the American market. It wasn't the start of it, it was the bottom. The really bad stuff happened a few days before that particular day in Japan. Now, if you do look at the Nikkei, that bottom day, there it is, it did start just before that on the Friday, but again, there was really weak economic data in the United States. And if you have a look at the initial release, the first release, some weak PMI data on the Thursday, the American market started to go down on that news, not because of any yen carry trade. Now, it made it a little bit worse, but yes, I am pushing back on anyone who says that. Now, I have to give Scott Phillips a bit of credit here. Now, I'd sometimes a little bit critical of him, but on Baby Giants, which is a podcast hosted by Andrew Page, Claude Walker, and a few other guys, they did mention the yen carry trade was the reason why the markets fell. And then on the Motley Fool podcast, Scott Phillips said, no, 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 that was just a part of it. It was also that weak economic data in the United States. So I'm going to have to give Scott Phillips credit there, because a lot of the other experts are saying, no, it was the yen carry trade. And I think the reason they think it's the yen carry trade, because it's the sort of like bias. It's a, what's that called? Recency bias. That's what it's called. The most recent thing that happened is the is the reason why it all happened. But no, in my opinion, it was that weak economic data in the United States, and the yen carry trade was just sort of added fuel to the fire very briefly, because again, the worst day on the Nikkei was also the bottom in the Nasdaq, and the Nasdaq since then has gone on a bit of a tip. Okay, so rant over, and hopefully I don't have to hear about the yen carry trade anymore after this. Anyway, let's go back to the XJO. So we did see it pull back a fair bit on that Friday and Monday, so the 2nd and 5th of August, and we've had a nice little rally. In fact, if you look at the weekly chart, down last week by the previous week by 2.1%, this week up by 2.5%. It's recovered all the losses we saw the previous week. And now I did sell a few stocks last week, but those were my worst performing companies. And I had a look to see if any of those companies' share price had recovered. In fact, a few have even fallen during this week. So I think those were the correct decisions. And I've actually increased my stake. It was Life 360 last week or the week before. Anyway, I've increased my positions in some companies, and I've added new positions in other companies looking for breakouts. Now, I'm not completely bullish, because look where the XJO is on the weekly chart in relation to the upward channel. It's nearer the top than nearer the bottom. So in those sort of situations, I'm not going to be absolutely bullish. But times are pretty good right now on the stock market. But who knows what's going to happen next week? Maybe some more weak economic data will come through and we will see further weakness in the markets. And don't forget, just because we've had a few good weeks, well, week and a half, doesn't mean that's the end of the story. In fact, the Nasdaq's had well, technically that wasn't, it was a really good one week candlestick, the week itself, but the bottom last week was Monday on open, and during actually the week, it recovered by about 2.5 to 3%. Now, if you go back, this is a weekly chart, if you go back to any significant downturn, it doesn't fall significantly straight away. It does recover. So, in fact, just prior to the GFC, the Nasdaq was down 8.11%, 5th of November 2007, and there was a bounce just after that. And then there was another big fall on the 31st of December, down 6.81%. It dropped a fair bit over the next few months, and then there was a bounce. In fact, the bounce went almost all the way back up to where it started. So GFC took a while for the markets to fall. There was a lot of time for it to unwind. And then when it really unwound back in late 2008, starting in September, October, that sort of period, it fell like a rock. And that was the time when all the bad things were happening in the United States. So when we do move into a bear market, it might take a while. It doesn't suddenly happen. The COVID-19 was a little bit of an unusual circumstances because something was happening we've never really seen before. Well, we haven't seen for 100 years. So, yeah, even the last little bear market, it took ages for it to unwind. Started to go sideways, then it went down a little bit. There was nice little bounces in it, some pretty big bounces in it. And finally, they saw a bottom around about October 2022. Anyway, overall, nothing to be worried about, concerned about with the XGO. Some good economic data in Australia. What was it? It was good jobs creation or something else. Waning US recession fears boost Australian shares to two-week high. Australia shares jump as strong US data calms recession fears. So nothing about the yen trade here, yen carry trade, and something else. Anyway, and I was certain there would be, I might have to look at the daily chart. Where's all the news? I thought there would be news popping up here. Let's have a look at the Nasdaq. Yeah, they've got economic news here. Consumers, Michigan consumer sentiment. Actual 60, there we go. Michigan consumer sentiment, a little better than expected and higher than previous as well. Building permits, preliminary down. Okay, that consumer sentiment is interesting, 67.8. Forecast was 66.9. That actually is interesting. Anyway, let's move on to the XSO. And just like the XGO, it's been a pretty good week. It looked fairly bearish if we go back to the end of last week, particularly prior to Friday, because on the Thursday session, the XSO fell to 2,880. So a nice bounce. Love to see the XSO get above 3,120, but otherwise nowhere near as bullish as the XJO, and the XJO is nowhere near as bullish as the Nasdaq. So let's transition to the American indices. And the Nasdaq has had a really nice bounce. Is this just a buy the dip situation? Is this sort of like what we saw back in April? You can see it dipping nicely there and then bouncing higher. So we need to see the Nasdaq get to at least 20,800. Well, above 20,800 for me to confirm that this is still a bit of a little, what do you call it? A little bit of a wave in the general uptrend of the Nasdaq. So in waves, you see little dips, and then you might as well call it troughs, and then peaks, troughs, and peaks. So uptrend, you need a higher high and higher lows. Now this particular low was higher than the previous low. So what we need now is another higher high. So that would confirm that we're still in an uptrend. Now that means it has to get rise by another 1,300. Yeah, and I think it could do it, possibly. Dow Jones, I think is looking, it's fairly similar. Fairly similar than the Nasdaq. I would never be as bullish on the Dow Jones as the Nasdaq. However, in saying that, the Nasdaq doesn't have to get that much higher to be an all-time high, 41,200. So not much to go from here. And in fact, it's only had 4 up days in a row because the Monday session was actually down a little bit. And the Russell 2000. Nowhere near as good as the other two. Again, small caps. So remember that huge rotation, that big rotation from the big companies to the small caps. That lasted, was it 2 weeks? Yes, lasted 2 weeks and it's gone. No one's really talking about that anymore. Sometimes the news cycles, we know the news cycle can last like one day, maybe even less than that. When it comes to indices, that sort of thing, what drives indices higher, and all that sort of jazz, that can last a few weeks. I mean, the carry trade, not really being talked about anymore, and this rotation into small caps, not really being talked about anymore either. In fact, anyone who's talking about it is probably too late to the, well, I wouldn't say too late to the party, but they're really behind what's happening. Okay, so that's the American indices, and to be honest with you, nothing much has changed apart from it was a good week. But just because it was a good week, nice momentum, doesn't mean next week's going to be a good week. We just don't know. But that consumer sentiment is interesting. Nikkei has had a really good bounce. That was capitulation. I'm calling it. That was capitulation on the 5th of August. And in fact, it's now higher than it was even the day before. So a really significant recovery with the Nikkei. And Hang Seng probably still in a downtrend. Yep. And nothing to see with the Hang Seng. I would assume DAX has had a nice recovery. Yes, it has. And the FTSE, yeah, it's had a nice recovery too. So everything's recovered, although the FTSE is down on Friday. Well, that was one of the only indices down, I would assume. And that's all I've got to say when it comes to the indices. Now let's have a look at commodities. And I'm just seeing the number for gold. And I think gold is almost at all-time highs. 2,506.84. That must have, yeah, a pretty good day for gold on Friday. Up, where is it? Up 2%. Yeah, up 2%. When did it rally? Did it rally after our markets had closed? Let's have a look. So it started to rally at about 6 p.m. last night. So I'm recording this on Saturday. So when I say 6 p.m. last night, I probably should have said 6 p.m. on Friday. So it rallied after our markets had closed. So I would expect a pretty good day for gold companies or stocks on the ASX on Monday, just based off this. And this is a beautiful breakout. When you look at the 5-minute chart, it happened, yeah, right on 6 p.m. And that is a classic, beautiful breakout. Before that, the price of gold was just going sideways. It was going sideways for, well, not that long. This is a 5-minute chart. But it was going sideways for a while. Yeah. And then all of a sudden it broke out. Beautiful looking chart for a breakout. You can see a little bit of panic back on Thursday, 15th of August. So not that long ago. There was a little bit of panic there over maybe a 30-minute period. But a beautiful looking chart for gold on the 5-minute chart. I have been told that commodity traders and currency traders look at smaller time frames, like maybe 5 minutes, that sort of thing. I don't know if that's absolutely true or this is just one person talking absolute crap, but I have heard that. Also, look at volume. Look at the big volume coming through when it dived, and look at the really big volume coming here in gold at around about 10 p.m. That's telling us something. And then the volume has started to decrease, which could be for various reasons. And the price of gold kept on going up. I'd probably like to see higher volume, but there could be reasons behind that. I would expect silver's had a good day. That's the 5-minute chart for silver. Let's go back to daily. Still look weaker than gold, but nice little bounce. In fact, the bounce in silver has happened over the last week and a half. I wonder if Adriatic Metals is doing okay now. I had a look at this company and it was down low. This could be an interesting bounce trade, but it could be something else, something more nefarious, driving the share price of Adriatic Metals down. I don't know because I don't really follow this company all that closely. And there's another silver company that people do mention time and time again, Silver Mines, but that had a pretty bad day. Don't have to show you that chart. Just have a look at it. SBL. Iron ore had a weak week. Yeah, had a weak week. So if we go back to gold, last week, gold was up 3.13%. Have a look at iron ore. Iron ore was down, last week was down about 6%. And you can see that as you look at the iron ore companies on the ASX, they all look fairly weak. There was a nice little bounce on the Friday session. I don't think iron ore bounced all that much, if any at all. No, a little bit up for the Monday session at this point in time. It's up a little bit, even though Monday hasn't begun yet. but a really bad week for iron ore, and it's fell through support level at $98. So we really need to see iron ore bounce. Let's just have a look at some iron ore companies, and you'll be able to see what I mean. But I am getting a little bit more interested in these companies because of how far the share price has dropped. But iron ore could fall a fair bit further from here. Just don't know. If I had a look at the BHP chart, I'd be fairly negative right now on this company. But again, valuation matters, and maybe $40 is a good time or good price to buy BHP. Fortescue has dropped down to $17, I think. $17.34. Again, this looks really negative, really bad, really bearish. But again, if you look at the weekly chart, the last time I remember it was good buying here was for Fortescue was back in October 2022 at about $14 or just above $14. Is it getting to those levels now? Getting close to where I might be interested. I assume Rio Tinto's had a pretty bad week as well, and Fenix dropped like a rock. Wonder what it did on Friday session. I didn't have a look at this yet, or have not had a look at this yet. And it's sort of recovered. Went down as far as 29 cents. Now it's up to 30.5 cents. Some good big volume coming in the last week. In fact, if you look at the weekly chart for Fenix, probably the biggest volume week we have seen for a while. Yeah, or almost. There was a really good up week on the 1st of July when the price of Fenix rose 19%, and the volume was almost at those levels. And I'm, yeah, Fenix looks a little bit more interesting where the price is, but I'd be really interested if it fell below 25 cents. If it fell like 22 cents, I'd be very interested. And the other one I've always followed, apart from Grange, is Mount Gibson, and this one looks really weak. Really, really weak, 33.5 cents. All right, what about uranium? Down 2%. Uranium this is a spot physical uranium. Uranium's in a downtrend. I'm calling it right now. Uranium is in a downtrend. This is just by looking at this. No change from probably last week. I might have said it's in a downtrend then as well. But physical uranium looks fairly negative, as do all the uranium companies on the ASX. I'm pretty sure they had a little bounce on the Friday session. Yeah, Boss Energy was up 5.5%. But this looks weak. Have a look at any sort of uranium companies. Palladium. Let's have a look at Palladium. Palladium looks pretty weak. What else is there? Bannerman. You're probably going to be upset that I don't include your company. That's okay. They all probably look the same. If one uranium company's chart does not look weak, that's probably a good sign for that company. And there's an exploring company that I was following, or still am following, Infinity. How's that looking? It's probably even the strongest out of all of them because of this, the good announcements the company has been releasing. In fact, this company's share price was up 6.7% on Friday. Oil, $75 a barrel. What happened? What happened on Friday? It fell 3.39% in one day. There looks like a double bottom there, doesn't it? That looks like a double bottom. And there's all these things coming up. What's happened? Oh, that's economic news. Looks like a double bottom, which there. But generally, when I look at oil, I just go, nothing's really happening, and nothing's been really happening for like five or so years. For some reason, I just really want to burp, but yeah, it's been doing nothing for 5 years. The first time it broke through. I'm gonna be a liar here. No, it was even higher back in the 2008s, 2007s, also during the mid 2000s. It was higher than this. When you look at this weekly chart for oil, why would people consider this the sort of commodity you can buy a company who's mining it for the long term? Because oil prices have just gone sideways over the last, 16 years. Oh yeah, that's oil. I still have no interest in oil, although I do own one oil company, but I think it's cheap. Lithium, no. Lithium's still going down. Well, that's lithium futures. Hopper had a good week. Nice little bounce in copper, but I need a little bit more than this bounce. This could be a dead cat bounce. The reason I say that is the volume was quite sparse. So when I see a bounce like this and fairly weak volume, that's not a good sign. There's not much enthusiasm from the buyers. You want enthusiasm. But anyway, I just think with a bit of a shift in sentiment in regards to the economies, you'd think copper would rally a little bit more. So maybe there is a delayed reaction. I don't know. Last week I was looking, it was looking like coal was breaking out. I still get that, even though coal was down 2% on Friday, still looks pretty interesting. So I do have an interest in Yancoal, maybe, well, not personally, but I'm just saying I will be looking at Yancoal, New Hope, Whitehaven a little bit more closely because of this particular chart. Tin, not Tim, tin. Okay. Nickel, no. Palladium, no. Cocoa, no. Okay. So that's all the commodities I want to look at. Didn't have a look at natural gas. So let's have a look at natural gas right now. And it's no. Okay, so let's have a look at Bitcoin, Ethereum, and then we'll have a look at some bonds, and maybe I'll look at the Australian dollar. Why not? So let's have a look at Bitcoin first. And Bitcoin, not much to talk about at this point in time. Still waiting for it to break above 74,000. It's got a little bit to go there. I would even look at this and go, there's more of a downtrend than anything else, but I'd say Bitcoin is still just going sideways. So it just shows you, a lot of people want to equate Bitcoin with gold, but they're completely different. Gold's in a nice uptrend, getting to all-time highs, and Bitcoin is struggling right now. And I would assume Ethereum is struggling as well. There it is. Ethereum this is a much more bearish chart than Bitcoin. But again, I'm a little bit, tiny bit bearish on Bitcoin, but nowhere near as much as Ethereum. Now onto bonds. So bonds have moved into a downtrend. And again, I'd like to see it below 4%. That would be really good because it bounced off 4% on the 5th of August, that really big down day. There was a really big bounce after that. Now it's pulled back. So we want to see it fall below 4% for the downtrend to be confirmed. That's all I'm saying. And the TLT ETF, I think that looks pretty good. It's also got a crossover there. So you could actually trade this, buy this, I think, because it's moving into an uptrend, which is exactly what you would expect. So this, in fact, this is the first time seen a crossover since 2021. And that was, it wasn't that strong. And the downtrend started, January 2021. There you go. And let's have a look at the Australian dollar. What's been happening here? And in fact, if you look at the Australian dollar, and if you have a look at the weekly chart, not the weekly chart. Let's have a look at the daily chart. It's been in a downtrend for a while, and I think the downtrend is trying to come to an end. I think so, because if you look at this was the major low here. Back in October 2022, and then the next major low was actually higher than this major low. I don't know if you could call these major lows, but we just had one major low higher than the previous one. I need to see we'll need to see a higher high, not really getting that just yet. Okay, so it does look like it wants to turn around. Okay, that's all I have for the commodities, Bitcoin, bonds, and currency. Let's have a look at individual companies' charts. Now, I do have included a few companies in this list. In fact, quite a few companies. I'm surprised I included that many. Have not gone through all the charts. I'm recording this video on Saturday, and typically I finish going through I can't do it in the one go. It's just, I can't do it in the one go, but it takes me maybe an hour to do it. And I usually spread it over 2.5 days because I start on Friday, finish it on Sunday night. So I haven't gone through all the charts. So there could be quite a few interesting companies out there. Haven't gone through my screeners either. So let's have a look at some of the companies I have included on this particular video. Now, not Beamtree, I talked about last week, and I think I talked about Credit Corp last week as well. So let's start with Cleanaway. So why Cleanaway? Okay, so looks like the share price was wanting to move into an uptrend. That's the only reason I've included Cleanaway. It looks like it's wanting to move into an uptrend, and that is what I'm looking for. And if you look at the long-term chart, this is the weekly chart. It's actually been in a weekly uptrend since 2017. Didn't realize this company has been on ASX that long. Yeah, that's interesting. So yeah, weekly uptrend, a little bit of weakness the last few years, but now looks like it wants to move back into that long-term weekly uptrend. So you've got the weekly uptrend, daily uptrend. So things are moving in the right direction for Cleanaway Waste Management. Probably the only other thing, I don't know anything about the valuation. Never had a look at this company. I see a lot of their trucks picking up waste, that sort of thing. But says the PE ratio is 143.6. I don't know about that. Probably some one-offs. Alcidion. Yes, Alcidion. I like this chart. I did talk about Alcidion in the most recent answer and reply video. So I did have a look at this chart. So I probably won't need to have a look at it right now. So have a look at that video that I did release on the 17th of August, because I did have a look at the chart. Another company that looks interesting is Humm. Are you willing to take a trendy position in Humm? We have seen Humm move into a sneaky uptrend. Now, the share price is at about a 5-month high. It is wanting to move higher. I think this could be led maybe by Zip. Now, it's not long after the company released a negative half-year report or full-year report on the 20th of February. So that was 6 months ago. So maybe all the bad news has been already priced in. And maybe the market is expecting some good news from Humm when they release their results soonish. So this is actually looking interesting, but am I willing to take a position in this company? My answer to that probably is no. Now, another company that is looking a little bit more interesting is Solvar. I'm pretty sure this is Money3. Solvar used to be called Money3, and then they changed the name. Let me just guess. Solvar. I could be completely wrong, but I'm pretty sure it is. Let's go back to 2021. I'm trying to see if there's any sort of name here. Results of meeting. Let's have a look. Whistleblower. Money3. There it is. Money3. Yeah. I knew Money3 changed the name, and I'm pretty sure it was Solvar. Well, now I'm pretty sure it's Solvar. Anyway, why am I interested in this company? So share price in a long-term downtrend. A lot of the companies are in this space have been in downtrends, and now they're all looking more interesting. So Solvar, MoneyMe is the next one. So we'll look at MoneyMe there. But in a long-term downtrend, so the downtrend began in early 2022. So we're talking about 2.5 years. And this is the first time I've had a look at this chart. So during that period, the first time I've gone, ooh, this is starting to look interesting. Share price has moved above the long-term moving average channel. That's the first sign. The short-term moving average channel is starting to turn up. Not only that, the share price in the past week and a bit, in fact, it broke out on the Monday session, 12th of August. Share price got above the previous low, which was early July. And the last time the share price was this high was back in February. So we are talking about a 6-month high for Solvar. So things are moving in the right direction for this company just based off this chart. So definitely one to put on your radar. In fact, I'm going to put it on my radar right now. Not my literal radar, but my watch list that I look at every single day. And MoneyMe is in that same category. So this was a horrendous looking chart. Moved into a downtrend early 2022. Share price at that point was $1.90. Moved down and down and down and down. There's no way you'd buy this company anywhere there, but I did right here. I thought, oh, that's a good announcement. Share price up 64%. I'm going to buy. Share price dropped. So I sold out of that position really quickly. I've been trying to trade it ever since, but it is tricky because we are in a consolidation period. Now, just like Solvar, this is starting to look way more interesting. Share price went on a bit of a rally 2 weeks ago, went to 10 cents, pulled lower because 10 cents is a natural resistance level. You can see that back in January, went above 10 cents about 5 straight days and then fell below. And the last few days, we've seen the share price rally. Nice little dip, share price rallying. So I think this is starting to look way more interesting. And if it breaks above 10 cents and stays above 10 cents, I think all systems go for MoneyMe. So I need to see it break above 10 cents, I think. On the flip side, on the flippity flip, we have EML Payments. This is probably a little bit different. Now, in saying that, there's a nice little support level at, what price is that? Around about 75 cents. Probably can see why that's a support level. Share price rose above 75 cents on the 12th of July 2023. And you can see share price touching 75 cents. 1, 2, 3, 4, 5, 6, and now again. So 7 times in the past year and a bit, and it always remains above 75 cents. It can't fall below 75 cents, which means there's more enthusiastic buying at 75 cents than enthusiastic selling, which is sort of understandable because people have this memory, investors have this memory, oh, EML Payments. I bought or sold some at 75 cents. It's back to 75 cents. Oh, I might buy some more. Oh, at 75 cents. Oh, I remember EML Payments when it broke above 75 cents back in August last year, and I missed it. But it's back there now. Oh, I'm going to buy some shares. That sort of mentality. And it did bounce up really nicely on the 8th of August, and now it's pulled back, maybe heading back to 75 cents. But overall, if you took away the support level at 75 cents, it actually looks pretty weak. EML Payments. Inghams Chicken, a company I would never think about buying if I was just into quality stocks. But this is not about quality stocks. This is about trading and looking at charts. And the one thing I see when I look at Ingham's chart is the share price got above highs we saw back in May, and the share price is now at a 6-month high. You can see a fair bit of weakness when they released the results last February. So the market is thinking maybe the results this time would be better than expected. I don't know. Who knows? This comes back to chicken feed, that sort of thing, which can really move Inghams Group share price all over the place. Would I trade this? Possibly. It's looking interesting because after that big few down days in February, share prices went sideways for 6 months. Sideways for 6 months. Now it's trying to go higher. And this, I am always looking for these type of charts. Inghams and Endeavour Group. Another company I would not buy for the long term. I don't think this is a high quality company. I do think there would be some people pushing back on that. They would say, oh, this is a high quality company. So they have a moat, what they sell, alcohol, it's not cyclical, that sort of thing. They also own pubs and hotels. And this is a company that Woolworths spun out because of ESG issues. But I don't care about all that. I just look at this chart and say, or I just look at it and go, this is not quite the same as Solvar, not quite the same as MoneyMe, but it's starting to look interesting. Its share price has moved above both moving average channels. It hasn't done that. Only did that briefly back in February, only briefly. But even then, I wouldn't have been keen for various reasons. Just looks like this company wants to move into an uptrend. Now, the last time the share price was at this level, like $5.50, was back in March. So there is a bit of resistance between here and about 570, but it's starting to look a little bit more interesting. Endeavour Group. Droneshield, I did mention in my answer reply video, I'll talk about Droneshield, give a bit of an update to this company. And why not? Because possibly the bottom has been reached. Share price did fall through this little support level a few weeks ago, but it rose above it during the week and is right on it right now, or just above it right now, $1.16.5. But the good thing is it didn't fall below $1. It fell below $1 just briefly. In fact, when I say briefly, let's have a look at the 5-minute chart. So dollar is right there. So it fell through it for about maybe 1 day. A full day, it was below $1, and there was a fair bit of buying when it did approach $1. A lot of buying coming in. You can see a lot of buying as the share price fell right to $1. So that was sort of a sign that maybe the low was being approached, and we started to see some buying coming in as well when the share price started to rally on the 13th of August, when the share price was about $1.06. But that buying came to an end. But yeah, I would actually say, without being overly confident, that the low has been reached, and that low is just under $1. Would I trade this right now? I don't know. I still, my preference would be to stay out of Droneshield for now, because I wouldn't be surprised to see share price fall. Wouldn't be surprised to see the share price go on a really good rally. Don't forget the company just did a couple raising, so that could do a few things. It could keep a lid on the share price, and it could keep a floor on the share price as well. If I see the share price move back to $1 and struggle to get it below $1, that could be a trading point. Apart from Appen, separately from Appen, not part. Unlike Appen, this is really looking interesting. The volume is what I'm just really intrigued by. Massive volume coming in. So is this a trading stock right now? Is this a plaything for day traders? It could be. I'm sure their results. There is no the Appendix 4C, was it? Yeah, the Appendix 4C, which is really the catalyst for this rally. Surely it wasn't that good to see the share price increase by 120% or something, maybe even more than that. The share price before that was 43 cents. So it's up about 250% since then. Is it justified? I don't know. My other little concern with Appen is if you draw a line right there, it's at a resistance level, the old highs we saw back in March. And again, look what happened there. This was definitely a plaything for traders back in March, and it quickly turned negative fairly quickly. So that could happen again. But the volume is intriguing. See, back in February, March, the volume expanded, and then when the volume reached a crescendo, that was the peak in the share price. This time around, the volume has remained strong. A slight dip, but the volume has really remained strong. And the peak in the volume was when the company released that really good announcement. That's actually what you want to see. You want to see the highest volume there. So this other period here, there was no positive announcement. In fact, the highest trading day was the day after the share price reached a peak. So I wouldn't be surprised to see this the start of a uptrend for Appen, particularly if the company can release a few more positive announcements to really justify the increase or the change in sentiment around this company. Okay, one negative company, Cochlear. Okay, this is broken down below a support level, which was $312. This was on Friday. I thought maybe the previous day they released their results. Market didn't like it, particularly I think the guidance for financial year 25. The share price did rally on the Thursday session and got back above the resistance level, but on Friday session it fell below on good strength. Really big volume coming through both days. That's a fairly bearish sign as well. When you see really big volume on these big down days, you want to see the big volume days when the share price is heading towards the bottom, sort of like capitulation. This is not capitulation. And as I mentioned, we did see share price rally when the share price did get below that support level. In fact, it did it twice, which is a good sign. So the share price is oscillating above and below that line. So it's sort of like a fight between the bears and the bulls. And then it fell below permanently. Maybe not permanently. That's a pretty negative way to say it. Fell below 300 and that support level at or just after open on Friday and remained below it. So that means there's no one willing to buy, or not. There was very little enthusiasm from buyers. All that enthusiasm for buyers was the previous day, not on the Friday session. So a fairly bearish day for Cochlear. Even though it only fell about 2%, it was bearish. And the share price now is at a 6-month low, which is not that much anyway. And you can just see they released a really good report in February. Share price rallied and only took 6 months before the positive reports turned negative. And now only slightly negative. CSL. But however, in saying that, sometimes the market can view a report negatively, sell off, and then the share price recovers almost immediately. This is exactly what happened to, well, maybe not exactly. So CSL share price dropped almost 5% on Tuesday, then rallied 2% the next day, up a further 0.12% on Thursday, and then a further 1.4% on Friday. And the share price is moving back towards where the share price was before they released that full-year report. So who knows? Share price could move in either way. This is one of the reasons why I try not to sell when a company does release a report. I want to wait a little bit of time. Sometimes that doesn't work. Sometimes I'm too enthusiastic to buy, or maybe even sell, but mostly buy. And I just can't wait a few days. I will buy on that day, particularly if I have a good signal. And I saw this. They had really good, surprising results. A retail company in the United States, JD.com. I have no idea what they sell. Let's have a look what they sell. This was just technical analysis. JD Sports. I don't think that's the same company. JD company USA. JD.com. Oh, is the largest retailer in China. Oh, I should have known that. Yes, this is the largest retailer in China. And let's go, where's the chart? So JD.com and Alibaba also had a pretty good day, if I remember correctly. Alibaba. Baba. Yeah, in fact, both charts are looking a little bit more interesting, although I do like JD. Oh no, they're almost identical. They're almost identical. P ratio for JD is like 9.8. There you go. Dividend yield 2.74%. I think the tide is turning for this company, and now could be a good time, maybe, if you like this sort of company. Anyway, that's all I have for this technical update video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. So if you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.